Welcome to The Explainer. Today, we're digging into a huge story, how Ford went from betting its entire future on an all-electric dream to slamming on the brakes with a multi-billion-dollar U-turn. Let's get right into it. Okay, let's just start with the headline number, because it is a big one. Ford is expecting to take a nearly $20 billion hit in special charges. Yeah, you heard that right. Most of that is going to land in just the fourth quarter. But you gotta understand, this is not just some accounting figure on a spreadsheet. This is the staggering price tag for a complete 180 on their all-electric future. A future that, just a couple of years ago, Ford was saying was the only path forward. It's basically the company admitting that billions of dollars they invested just aren't gonna pay off like they thought. So that leads to the big question, right? Why? Why would Ford make such a drastic and frankly expensive change right now? Especially after betting the whole farm on pure electric vehicles. To really get the scale of this shift, we need to rewind the clock a little bit. We have to see just how all-in Ford really was on its original, super ambitious electric dream. You know, it all kicked off back in 2021. The CEO, Jim Farley, he unveils this Ford Plus plan. And the mission was crystal clear. Go big. Go all in on a fully electric lineup. So for the next few years, billions and billions were just poured into these big EVs and new battery plants. And then, bam, by 2025, a major pullback is announced. I mean, the speed of that reversal is just stunning. So that was the ambitious dream. But that dream quickly slammed headfirst into a much, much tougher market reality than anyone, and I mean anyone, including Ford, was expecting. And hey, you don't have to take my word for it. Ford's own CEO, Jim Farley, was brutally honest about the whole thing. He just laid it out there. The really high-end electric models, the flagships of their whole strategy, they just weren't selling, period. And it wasn't just one thing that went wrong. It was more like a perfect storm of headwinds hitting them all at once. That explosive growth we saw in EV sales, it started to cool off. Then you have consumers getting total sticker shock from the high prices. And to top it all off, a really important $7,500 federal tax credit disappeared, which put another big dent in demand. This quote right here from one of their executives, Andrew Frick, it sums up Ford's new philosophy perfectly. They're basically saying, we're done building for a future someone predicted years ago. We are reacting to what customers are actually buying right here, right now. Okay, so the old plan is out the window. What does the new plan look like? Well, it's a completely different roadmap, and it's one where, all of a sudden, hybrids are taking the driver's seat. I mean, just look at the contrast between the old plan and the new one. It is stark. Ford is shifting from that all-or-nothing bet on pure EVs to a much more balanced portfolio. So what does that mean? It means moving away from those big, pricey electric trucks and instead focusing on smaller, more affordable EVs, while also reinvesting in their core gas-powered vehicles, and this is the big one, hybrids. So this new strategy, it's kind of like a three-pronged attack designed to meet customers where they actually are. First, they're developing a whole new flexible platform for smaller, cheaper EVs. Second, they're introducing a new kind of hybrid technology into their most iconic models. And third, and this is really clever, they're creating an entirely new business out of the battery plants they've already built. So let's talk about this ERV technology for a second. It stands for Extended Range Electric Vehicle. The best way to think about it is like having the best of both worlds. You get that smooth, efficient electric drive for your day-to-day stuff, but you've also got a small gas generator on board that can recharge the battery whenever you need it. This totally gets rid of that range anxiety that stops so many people from going full EV. Okay, so we've covered the why and the how. But what does this massive, almost $20 billion strategic pivot actually mean for the company's financials and for you, the customer? Let's get to the bottom line. Now, get this, because this is where it gets really fascinating. Despite that massive write-down we started with, Ford is actually increasing its 2025 earnings forecast to $7 billion. So how is that possible? Well, by shifting focus back to hybrids and gas vehicles, which are just more profitable right now. They think they can actually make more money even while taking this huge hit on their past EV investments. And if you look down the road to 2030, you can really see the new vision. The goal is for half of all their global sales to be electrified in some way. But, and here's the key part, hybrids and these new ERVs are projected to outsell pure EVs. It's a total rebalancing of what they think the future looks like. And this pivot, it isn't just about cars. Remember those battery plants they were writing down? Well, Ford is repurposing that massive investment into a totally new business, stationary energy storage. They're going to use their battery know-how to build these huge power packs for things like data centers and the electric grid. It's an incredibly clever way to turn a potential loss into a whole new revenue stream. Which, of course, leaves us with one final big question. Is Ford making a brilliant, pragmatic move here? A pivot to meet the market where it is today and protect its own bottom line? Or is this a retreat from the difficult, but maybe necessary, transition to an all-electric future? That, right there, is the billion-dollar question.